So today we're looking at a few small money moves that can make a big difference when it comes to your finances, whether you're getting a loan, growing your money, or planning for the unexpected. But before getting into my list, I would like to thank CarGurus for sponsoring this video. We'll talk more about how their finance and advanced product can help you shop wisely a bit later. So the first small money move is to check your credit report at least once a year. It is estimated that about half of consumers have not checked their credit report or score in the past year, and 18% have never checked their credit. Now, some people don't give any thought to their credit until they're ready to apply for a loan, but the time to think about your credit is not while you're filling out a loan application. If you have plans to buy a house or car in the next 6 to 12 months, or if this is something that you want to do in the next few years, now is the time to check your credit. Because you might think that your credit score is higher than it actually is, and if you have a lower score, this not only makes it harder to get approved, but if you are approved, you could end up paying a higher interest rate, which means you pay more over the life of the loan. And just to illustrate how bad credit can cost you, if you have an 800 credit score and you're financing a $25,000 car, over 60 months you might qualify for an interest rate of 3%, in which case you're looking at a monthly payment of around $443. On the other hand, if you have a 500 credit score and you're able to qualify for that same loan amount over 60 months, the lender might give you a rate of 10%, and if so, you end up with a monthly payment of around $531. Keep in mind though that this tip is not only for those who are thinking about getting a loan. Even if you have no intentions of applying for credit, you should still check your credit report at least once a year, because that is the best way to catch fraudulent activity as well as negative errors that can drive down your credit score. So get into a habit of checking your own credit file. You can go to annualcreditreport.com and get copies from all 3 of the bureaus. And to clear up a misconception, checking your own credit does not hurt your credit score. Another tip is to think about getting financing before buying a car. A common mistake that some car buyers make is thinking about financing last. I think most people are accustomed to getting pre-approved for a mortgage before shopping for a home. But when it comes to a car, many people will test drive a car, fall in love with the car, decide to buy it, and then think about financing. But although that's how many of us have been conditioned to think about the car buying experience, it actually serves to your advantage to consider your financing first and then shop for a car. And this makes sense for 2 reasons. 1, you know what you can afford before you even start looking at cars. And 2, you avoid falling in love with a car that you can't finance. This is really simple to do, and CarGurus can be a big help with this. Smart car shoppers know that CarGurus can help you find a great deal on a car, but now CarGurus can also help you find financing too. With CarGurus Finance in Advance, car shoppers can get a personalized financing offer and see their real monthly payment, all before contacting the dealer. Other sites give you estimates, but why settle for an estimate when you can get real personalized rates? Plus, there's no impact to your credit score and it only takes minutes. Car shopping is stressful enough. Why wait until the end to explore your financing options? When you use Finance in Advance, you can contact the dealer with confidence, knowing you have your financing offer in hand. And when you need help getting a great deal on a car, on CarGurus, only 30% of cars receive the highest deal ratings. So if CarGurus says it's a good deal, you can rest assured it really is. So if you're in the market to buy a car, find your car and your financing at CarGurus today, and I will include a link below. The next small money move is to negotiate your credit card rates. Credit card interest rates can be very expensive. Some cards can charge as much as 17% or 18% or higher. And if you have a high rate and you carry a balance from month to month, you could end up paying hundreds or more in interest. Now, if you have credit card debt and you're trying to pay off your balance, making higher payments on a consistent basis is probably one of the fastest ways to make headway, but that's not the only thing you can do. You can also call up your credit card companies and ask for a better interest rate. And this is something that a lot of people don't think to do, but credit card rates are negotiable. I did this several years ago when I was paying off credit card debt, and every single company, with the exception of one, lowered my rate on the spot. I didn't have to beg, I didn't have to plead, I didn't have to play hardball. And to be honest with you, I'm still surprised by how easy it was. Now, for this to work, you will have to have a good payment history with the creditor, meaning that you make your payment every single month, either on time or before your due date. And a rate reduction is so crucial crucial because if you're able to pay less interest, that means that more of your monthly payment will go toward reducing the principal balance, which can help you pay off the debt faster. So the next money move is to move your money out of a regular savings account and put it in a high yield savings account. So we all know the importance of having a savings account. They come in handy if you have a car repair, a home repair, or you can use your account to save up for something big. Now, a lot of people will get a savings account with a local bank, maybe one that's close to their home so their money is easily accessible. However, there are benefits to keeping your money less accessible. And if you haven't already, seriously consider opening an online high yield savings account. These are accounts that you have online, typically with a bank that doesn't have brick and mortar locations. So you will link your online account to your offline account, which will allow you to easily transfer funds. I really love these accounts because it makes saving money so much easier. It often takes about 2 days to complete a transfer. Plus, many online savings accounts don't come with a debit card, which really helps to cut down on a lot of those impulse withdrawals. Now, I will say I do also recommend having another savings account with a local bank and keeping a small amount in this account for immediate emergencies. But for the majority of your money, move that cash to an online savings account. And at the moment, rates are pretty low across the board, but typically an online savings account will pay a rate that's 10 times what you would get with a regular savings account. So it offers another way to grow your money. The final tip is to revisit your life insurance policy. Insurance needs can change as we get older. And the reality is a policy that you purchase as a young adult may not be sufficient today, especially if you're now married or you have kids or you have bigger expenses. Now, there are no hard or fast rules regarding how much coverage to receive, but a general rule of thumb is really to get a policy that's about 8 or 10 times your annual salary if others rely on your income. So if you make $50,000 a year and others rely on your income, at the bare minimum, you should probably have a policy between $400,000 and $500,000. And if you purchase early, you can find many affordable term policies of this amount. And as far as purchasing early, that is also crucial because one thing to keep in mind is that getting life insurance becomes harder as we get older. Not that you can't get a policy at an older age, however, we typically start to develop more health problems with age, and depending on the amount of health issues that you have, some insurance companies may deny you a policy or they may charge you more. So the best time to get insurance is when you're young and healthy. So there you have it. That's a look at a few small money moves that you can make today that can make a big difference in your finances. And I really hope that you guys enjoyed this video, and if you did, please give me a thumbs up. And if you haven't already, do consider subscribing. Here we talk a lot about personal finance, different ways that you can fix your wallet and get to a better place financially. So if you like videos like this, I do post every weekend and sometimes during the week. So thank you again for watching, and I'll see you in a few days. And again, thanks to CarGurus for sponsoring this video.